Hey, Sats fans, welcome back to another episode of Swan Signal Live. I am Brady Swenson, your host. And today we have what promises to be an absolute riot full of energy with Max Keiser and Greg Foss. This is a combo that we've wanted to get together for a while, so I'm excited to make it happen. Before we dive in, I want to tell you about a new show that Swan is putting together. Swan Studios is putting together, along with Bitcoin Magazine, a new show called Hard Money with Natalie Brunell. This will be a weekly show that will bring news and interviews and story packages from all around the world with Bitcoin. Max is here today, and he also is working under the Hard Money brand called Hard Money Keiser. If you go to the Swan YouTube channel, you'll be able to see the first episode of that with Ricardo Salinas and set in El Salvador and on his private jet for the most part. So you can check that out as well. The Hard Money franchise is going to be super high quality production value and bring some, I think, really great content to the space. So let's take a quick look at a teaser for Hard Money. This will be coming in June.
Hello and welcome to Hard Money. I'm Natalie Brunell. Bitcoin remains in the high Hope House here in El Zante. It is a community center that does outreach at Bitcoin Beach. Look, they even got their own Bitcoin mobile.
I want to start a Bitcoin caucus with other elected officials across the political spectrum.
It turns everything brighter. Magic money, baby.
Goldman Sachs has offered its first Bitcoin-backed loan for cash.
Everybody knows the word Bitcoin.
The Bitcoin. Oh, Bitcoin.
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 Sí. Economic freedom with Bitcoin.
On Hard Money, we'll bring you the top headlines of the week with analysis you won't find anywhere else. I'm Natalie Brunell. Welcome to Hard Money.
All right. That is Hard Money. I'm really excited about that launching. It's going to be every week, so make sure you check it out. First week of June. It will drop June 8th, and it's going to be great. So really excited to bring in Greg and Max, two legends of the space. Mr. Foss, how are you today?
I'm doing great. Thanks for having me, Brady.
It's good to see you again, man. Welcome back. And Max?
Hi, Brady. Here comes Corey. Here comes Corey.
Here comes Corey. Corey's been on a tear.
Corey's on the warpath.
He's on the warpath, man. It's great to see. He's I think he's a bear market leader, a wartime leader, is what we're finding out here. And
he's a wartime consigliere.
There you go, the consigliere.
We're gonna go to the mattresses. All those shitcoins need to be destroyed.
It's true. This is the time for destroying shitcoins. Liquidity dries up. Everybody, well, what do you call it? The tide goes out, and you can see who is out there swimming naked, right? So, look, Greg, let me start with you on this one. All right, you guys, you're known for your no bullshit, kind of high energy takes at times. What gets your blood boiling more than anything else in this space?
Wow. Well, just topically, I'm going to put a positive spin on this. I am very impressed with the way that Bitcoin has traded in light of the Luna collapse. I believe that 3 years ago, and this is just an opinion, that 3 years ago, if we had absorbed this type of hit, which is plus minus $50 billion being vaporized out of the digital asset space, including the fact that that digital asset was holding some Bitcoin as collateral, and they had to sell $3-ish billion of Bitcoin, that Bitcoin would have fallen a lot more in price. And that's a credit to a number of things that it didn't fall in price, to things like short interest in the market, which people could argue, the cash settled futures is not good for Bitcoin price. Well, some of that bid was certainly short covering. Others were disciplined buyers of Bitcoin at various price levels. So what gets me upset is people saying that the price of Bitcoin is down and not considering external factors. Firstly, the Luna collapse, and then secondly, the fact that the NASDAQ is down 30% from its all-time highs as well. So I get upset that people don't understand. They look at Bitcoin in isolation to other assets around the world, and that's just not how financial assets trade. There is always a correlation or a perceived correlation that's programmed by algos in New York. And I will just tell you that this, in my opinion, was a growing up moment for Bitcoin over the last, call it 3 weeks. So what gets me upset is people don't appreciate how big an event this was. And someone's just saying, yeah, Amazon's down 50%. Look, you can run through a whole bunch of different comps and just realize that Bitcoin is down from its all-time high, correct? But by the same token, the value of Bitcoin has actually increased by various different calculations. We can talk about that later. And the price is hung in there, in my opinion, very maturely, meaning it's a big boy asset now.
That's cool. I love it. I love it. Max, what gets your blood boiling? You've been in this space for a long time, and you've, seen your share of scams, etc. What is it now that continues to get your blood boiling?
Yeah, I was thinking, I think we're basically in the fourth cycle of scammers. So the Raoul Pal and Mike Novogratz and a few others are kind of at the center of this latest wave of bubble and scams that have come into so-called crypto space. And and as Greg has pointed out, the asset class that is Bitcoin is kind of shrugging it off, and it's not really having an impact on Bitcoin at all, really. Like it used to. In days gone by, some of these major scams, like OneCoin was from a few years ago, and others, they had more of an impact on the price of Bitcoin. And what boils my blood is that rejects from Wall Street, like Mike Novogratz, who was kind of a hedge fund reject. He fucked up his hedge fund. He walked away from the industry for a couple of years and saw an opportunity to recreate all the scammy shit he was doing on Wall Street in crypto. Or Raoul Pal is another Wall Street reject. I guess he wasn't given a partnership option. So he kind of went away and crawled into a cave for a while and saw an opportunity come into Bitcoin. Bitcoin is both the greatest and the worst industry in the world. It attracts the worst people in the world. It also attracts the greatest people in the world. And it's this dynamic that we call price discovery. It's, the price is reflective of the fact that you've got the smartest and greatest and noblest people in the world working on Bitcoin. You've also got the shittiest, worst, morally bankrupt scumbags in the industry as well. When you put them all together, you get a current price, which is whatever it is right now.
The competition between the morally bankrupt and the morally sound, the sound money, right? Foss, go ahead, Max. Did you have something else there?
I just can't. I can't top that one, Max. Let me just say that
I've already silenced Greg. We're at only one question.
Show's over.
I love it, man. You boomers, man. I love you guys. So and us guys. So let's not hold back any.
That's low,
let's
man.
not hold back any punches, Max Keiser. So all of those are true. Here's what I would say though, that Wall Street is 99.9% takers, and the Bitcoin community is at least 85% givers. The other 15% are populated by, you might have called them Wall Street rejects, who still have that 99% taker in their blood. I will hold off in terms of blaming certain individuals, but they should have known better. Luna was the Fiat Ponzi digitally designed. Luna was the debt, and the token UST was the currency. And this whole thing was designed exactly like the Fiat Ponzi. And you tell me that people couldn't see that a bank run would occur and that absolutely the confidence in the system would implode? This was a beautiful Lehman moment for the crypto industry. And I don't use that name favorably, for the crypto industry. And guess what? No Fed bailout, no nothing, traded 24/7, TikTok next block. Let's get on with it. The whole system functioned absolutely as it's supposed to, including a digital fiat called Luna that went to zero because it was a piece of shit. So next block.
Yeah, well, the guy Don Ho, or is it Do Kwon or Do Kwon? He had been involved in several scams before this one, and so this was just the latest in a series of scams, and it was designed as a scam. It's similar to BitConnect in its design as a scam, and it blew up like a scam. The people who, like again, Mike Novogratz, who didn't do any due diligence, is irresponsible. It goes beyond just being sloppy. I think it's bordering on the criminal. That he didn't do a shred of due diligence on this very obvious scam. I mean, Corey, of course, was tweeting about it before it blew up and saying, this thing is built to blow up. It's going to blow up, and it blew up. Same thing now with Celsius. Celsius, the more you dig into it, the more it's an obvious scam, and it's in the process of melting down. That's going to be another huge washout in the crypto space. But all of these cryptos are going to get blown out of the water. They're all technically securities anyway. The SEC is dragging their feet. We can ask ourselves why Gary Gensler is failing to do his job. Is he just another captured regulator out there doing the bidding of his puppet masters? It looks that way. But eventually, Bitcoin is so beautiful that it will push out these crooks, these charlatans, these captured regulators. And, there's no point in trying to sugarcoat it. These guys are recidivist criminal scumbags, and they deserve to be in prison. The fact that they're not in prison is a shame. Really, it shows that the justice system in America is broken down. But I think that's pretty obvious across the spectrum. We see this all the time.
Yeah, absolutely. I started tweeting a little bit about Richard Hart last night, and during 2017, he was a maxi for many months. He ran on his YouTube channel. He had people on, and he was great. I mean, he's a smart dude. He's well spoken, and he was great at ranting about shitcoins and just promising that Bitcoin is the way, and it's the only thing that matters. And yeah, he was a maxi. So after the bear market wrecked him, because I think he had stuff on leverage, and his just completely changed his attitude after into early 2018, and then came out with Hex 6 months later, something like that. And so I think it's another thing. Richard Hart goes back to I think 2002. He was convicted of email fraud. He got the moniker Spam King. He went down to Panama, and all kinds of crazy stuff happened down there. He was never investigated, but there's lots of anecdotal evidence. Anyway, like you're saying, Max, these guys are recidivist criminals, and they're running these Ponzi schemes because in this space, you can do it, and you can probably get away with it, or you might get away with it. And it's a risk worth taking when you're talking about tens of millions or hundreds of millions of dollars.
Yeah, I would differentiate between Richard Hart and, let's say, Mike Novogratz and Raoul Powell. Richard Hart, when he launched the project he's involved with now, I remember quite clearly, it said on the cover page that this is a scam. This is a Ponzi scheme. I mean, and I was wondering what the point of that is. But he said up front, I guess it's to provide cover at some point.
Sure, that makes
legal
sense.
cover. But it said, I mean, he disclosed that it wasn't this isn't, I forget the language, but it said this is in fact a scam. I mean, it says so right on the cover page. So buyer beware. And again, he's coming from, it's a fairly small scale operation compared to, let's say, these two other guys like Novogratz, who's a Wall Street veteran. He's trafficking in billions of dollars. He cannot claim not to know what he's doing. As Corey pointed out, he's claiming that A, he both made money on the scam, and B, he was unaware that it was a scam. He can't have it both ways. But we live in a world like this now, where if you have regulators in your pocket, then there's no law that applies to you. I mean, that's been true on Wall Street for many years. I mean, Alan Greenspan talked about it, talking about how markets have a quote unquote wiggle room. He knows that a lot of shenanigans go on, but he said we need the liquidity. is how he justified it going back 20 years. But what's happened is that little wiggle room has become the defining characteristic of these markets. There is no true price discovery anymore. It's all wiggle room. It's all fraud. The prices are all out of whack. And who suffers the most? You know, the average person, not the people on Wall Street who just get bailed out every time they make one of these egregious lapses in judgment and commits a felony.
So Foss, what do you think about that? I mean, we've been talking about these scammers in the crypto industry, but Max brings up a good point. Would you call much of what goes on in Wall Street a scam covered by central banking?
There's certainly socialized losses, right? The biggest event in my career that defined the first 10 years of my trading life was long-term capital management. And, there you had, and I recommend everyone read a book called When Genius Failed. I think it's by Roger Lowenstein, but nevertheless, great book that detailed how a Nobel Prize winning economist working at a hedge fund could lever themselves 100 to 1. Okay, that was the leverage in long-term capital management. They had every single trade under the sun on the books, but the big one that blew them up was they were selling insurance to the street. They were basically selling volatility. And coupled with a number of factors in the markets those days, Wall Street needed protection. And long-term capital kept selling protection to the street, meaning to the Goldmans of the world. And long-term capital was selling vol. And they were like, I can't believe this. This is at the 99% confidence interval. Vol should not be this high. Let's say it had spiked to 60% annualized. They go, vol should not be this high. It's at the 99% confidence interval. The fact of the matter is they based it on 7 years of history, Brady. 7 years of history, Nobel Prize winning economist levers himself 100 to 1 and gets bailed out. Because guess what? If they hadn't bailed out long-term capital, Goldman would have collapsed. Solomon Brothers would have collapsed because they had all been running to long-term capital to buy protection. When you buy protection, you buy volatility. The seller of volatility gets crushed as vol increases, and that's exactly what happened. Their 100 to 1 leverage. You know, who buys insurance from an insurance company that is 100 to 1 levered? Only Wall Street. Therefore, they got bailed out.
Right. Well, going back to long-term capital management. So this was a situation where Alan Greenspan, who was running the Fed at the time, lowered interest rates to bail out LTCM. And so all the pensioners in America had to collectively bail out these hedge fund guys in Greenwich, Connecticut, as Greg was saying, socialize the losses. And we saw that, of course, in 1987 when the plunge protection team was created. Again, Wall Street's lunch was saved, but the losses were distributed to the masses, and the Wall Street was saved. We saw that in the 2008 subprime crisis. Again, the bankers were saved, and everyone else had to suffer. And we're seeing it right now. There is the crisis part 2 from 2008, and everyone who's on Wall Street and is a banker is getting bailed out, and everyone else is suffering from inflation, and everyone else is suffering from price distortions and social unrest. Again, it goes back to this idea of moral hazard, which is, again, the wiggle room. When the central bankers and Al Greenspan and others, or Ben Bernanke or Jay Powell says, you know, we have the right to engage in moral hazard. We have the right to bypass ethics, morality, and the legal system to protect the functioning of these markets and to protect the liquidity of these markets. And what that's done is created an economy and a society based on fraud. So there's very little now in America that's not tied to Wall Street and therefore tied to fraud. The medical industry is now entirely fraudulent because it's been commodified and securitized. All of banking, obviously, has been securitized and runs on a business model of fraud. The agricultural industry, the industrial industries, all of the sectors of the economy are tied to some degree to their cash desk where they squeeze out extra profits, engaging in fraud. It's just fraud. And as the dollar loses world reserve currency, Brady, the problem is that other countries are saying, you know what, maybe we don't need America. Maybe we don't need the US dollar. So in this crisis, the difference with this crisis, Brady, is that there's no coming back. The inflation we see now is not going to reverse. Gas is going to $10, $11, $12 a gallon, and it's not going down. Prices of food are going to go up on a permanent basis because the entire globalization of post-World War II is becoming unglued, and the dollar as world reserve currency is losing its cachet. And this is a new reality for America, really, since post-World War II, where the standard of life is going to drop quite significantly because of all these bailouts. The chickens have finally come home to roost.
Yeah, it's the wildfire analogy, right? And now this is going to be a giant fire. So people have been saying this for a long time, especially gold bugs, Austrian economists, that you can kick the can down the road, creates this moral hazard. But so far, the Fed has pulled the rabbit out of the hat and landed the economy somewhat safely after maybe a year and a half of rough times. So you think, Max, that this is finally the big one, that they're not going to be able to resurrect some form of stable economy with lower inflation than 4 or 5%?
Yeah, because it's, February 24th, Russia, which is the biggest commodity producer in the world, said "fuck you," and they said essentially that we're going to go from a financialized global economy to an economy that runs on commodities.
Right.
The price of commodities has been kept artificially cheap by the machinations of financialization and the central banks, and everybody was playing in this world except for Russia. Russia was never part of the gang, never part of the cartel. It was always going in its own way. And on February 24th, after 20 years of expressing an interest to take a different path, finally Russia said, "You know what? Fuck you. We're not going to play this game anymore because we think your intentions are horrible. So we have a right to defend ourselves." And as a result, we are now in a new era, which is a multi-year secular, inflationary, commodity-driven global economy where money printing and the central banks become increasingly more powerless. Gold has a problem with price discovery we've discussed before. Bitcoin, the price is off its highs, but I think of it like this: when it was at 70,000 a coin, it was telegraphing the hyperinflation to come. Markets are discounting mechanisms. Now that we have a big burst of inflation, it makes sense for Bitcoin to pull back and retrace some of the gains and build a new base, and then catapult up to 200,000-300,000 a coin as the world starts to figure out that there's very few places to hide. As a matter of fact, I would say the only place to hide is Bitcoin.
Foss, what does Max mean by commodity-driven economy? Does that mean that, like you said, gas prices are going to stay really high, wood, lumber, all of those commodities?
I believe so. Those are hard assets to a degree, not as hard as our beautiful Bitcoin. But there's a couple of things Max said that I'd like to reiterate. I agree that we are going to move to 5% inflation targets. I believe there will be a Federal Reserve restaking of their dual mandate, which is full employment and control of inflation. Well, those two dual mandates are somewhat laughable to begin with, because you can't have, if you try and control inflation at 2% when it's running at 8%, that means you need to jack up interest rates to a point where it causes a recession, and then therefore full employment is a fleeting goal, right? So whoever designed that dual mandate for the Fed was probably a grade 2 equivalent type of financier. At the end of the day, they're going to move the inflation target to 5% from 2%. They're going to basically monetize debt. They're going to have a yield on the debt that is going to be materially lower than the inflation rate. And it's one way that Luke Groman and I agree that they can skate the budget, or the deficit, if you will, accumulated deficit, on side by growing your GDP via inflation and or holding down your interest coupon by yield curve control or any other method, so that basically bondholders get monetized. Over time, bonds are going to be the worst investment vehicle very simply. Why? Well, inflation compounds, Brady. This is something that very few people take to the bank, okay? You can go from 8.5% CPI down to 6% CPI, and the Fed's going to call a victory because inflation is declining or disinflation. The funny thing is, though, after 2 years, one of 8.5% and one of 6%, you're essentially at 15% inflation. Bring it down to 4%, 3%. Over time, you could go into negative and actually deflation scenarios and still be way behind the 8 ball. So never forget that inflation compounds. You need to own assets that can fight a disinflation environment starting from an inflationary monetary induced economy. That's what capitalism is. Capitalism needs inflation so that the collateral backing bank loans appreciates over time, because the reality is all the banks are undercapitalized. It is a function of the Fiat Ponzi. When you only hold $6 to $8 of equity risk capital on your books as a bank to protect against loan losses, the other 94 or 92 cents or 94 cents on the dollar comes from depositors' money. You need inflation. They need inflation. They can't control it. If they do, it's going into a depression. This is not a soft landing. You might have been a little gratuitous in your definition. We are currently probably in a recession right now, and the Fed has only raised rates twice. They're saying they're going to raise another 7 times and stop quantitative, or do quantitative tightening. That QT is equivalent to another 4 additional rate hikes. So they're talking another 11 rate hikes. Don't even pretend that you're going to do another couple, let alone another 11 in total. The economy can't stand it. We will be in depression. And a final shout out to Max. Yes, Putin understood this. And guess what he's going to start doing, Max? He's going to start pricing his energy in Bitcoin, because Bitcoin is digital energy, and it makes sense to sell valuable natural resource commodities or energy for beautiful monetary energy. Why sell it for a worthless fiat dollar, petrodollar, that they don't even have access to when they get blocked on the SWIFT system? So many easy scenarios to play out here, and no one's listening.
Right. Well, on February 26th, effectively the U.S. Seized foreign assets and defaulted on their U.S. dollar obligations. So similar to 1971, when the U.S. defaulted to Great Britain, when Nixon went on the gold, took us off the gold standard. And this began this 50-year experiment of all fiat money, which was really the first time ever you'd had all economies running on a fiat standard, that nobody had any hard money. So, and then on February 26th was really an echo of that moment, the Nixon shock, really, when the U.S. essentially said that the dollar is completely untrustworthy and that we're going to default and we're going to seize reserves of foreign countries whenever we want to. And I just don't think that, Greg, we've talked about convexity before and the central banks. And as a result of the 2008 bailout, they loaded up themselves with a lot of these debts. And if long-term capital management was leveraged at 100 to 1, the Federal Reserve Bank conservatively is leveraged at 50 to 1, if not closer to 80 to 1 right now. So if they try to take rates anywhere higher, you're going to have massive default at the central bank. The central bank is going to need a bailout. So in 2008, Federal Reserve bailed out Wall Street. They swapped all their bad debts for fresh treasury bills, and they put all that bad debt on the books of the Fed. Now all that bad debt is worth 0 cents on the dollar, and nobody wants to buy U.S. Debt anymore. The U.S. Treasury bond is being vomited from the reserves of countries all over the world. Nobody wants to buy U.S. debt. It's no good. It'd be stupid to buy U.S. debt. China's getting rid of their debt. Russia's gotten rid of all their debt. Japan is a huge basket case. You know, Japan is actually the linchpin that holds together this whole global Ponzi scheme, because they always had the lowest rates, and you could always do that carry trade of borrowing in Japan and putting your money into some other currency and making a positive spread and then leveraging it up 20 times, and you've got this great carry trade. But that looks like that's also blowing up. So, I mean, I understand yield curve management. I understand that they can try to bring rates to a higher level, and I can understand, but that presumes that the game has another chapter to it. I don't think there is another chapter to it. I think the Fed goes bankrupt. I think the U.S. goes bankrupt, and I think that that's what we're looking at. And I think this is why there's a lot of countries are beating the war drum right now. There's a lot of saber rattling going on, and there's the U.S. now is going to open up another front against China, as well as the proxy war in Ukraine against Russia. So this is the end of empire stuff, Greg.
Yeah.
This is like America's had the world reserve currency for 100 years. It's had a great run, but it looks like this could, another 5 years, the U.S. could be pretty much
I concur.
finished.
Yeah, I would concur. I will also say, though, that if the U.S. is done in 5 years, Canada should have been done 2 years ago. Okay. And my precursor for the U.S. to fail would be a G7 country. Unfortunately, my beautiful country of Canada will likely be the weak sister amongst the G7 countries that'll be the first to fail, primarily because we have a buffoon as a prime minister who says stuff like, you know, the budget will balance itself. But at the end of the day, let's look at what Max said. In the context of all other fiat countries, the USA will be the last fiat to fail. That is highly likely. The second to last will be the European Union, on the basis that Portugal, Italy, Spain, and Greece should have failed already if it wasn't for the Draghi saying we'll do whatever it takes. But yes, Max, it's only mathematics. The debt spiral is increasing. That's pure math. The question is, how long can this go? And nobody knows, so you always have to buy insurance. And this is what I want to point out. Well, two things. First of all, you said foreign central banks are not buying U.S. treasuries anymore. You're absolutely right. The percentage of global assets that are held in U.S. treasuries has declined from 72% of foreign reserve reserve assets to 59% of assets at global central banks. Okay, so that's a meaningful decline, including Japan, that sold something like $60 billion worth of US treasuries in the last quarter. All of this stuff, this carry trade out of Japan, is leading to things that is unsustainable for people to hold US treasuries in a debt spiral. And the buyer of last resort is the quantitative easing and the money printing at the Federal Reserve. But can I point out that based on my model of it valuing the intrinsic value of Bitcoin using credit default swaps, Bitcoin is now worth over $400,000 US per coin as a insurance policy on a basket of global fiats, okay? This is a dynamic measurement that changes as the spreads or the credit insurance premiums change on default for sovereign nations. The USA still the market only charges the USA 16 basis points per year, which is equivalent to $16,000 to insure $10 million of US Treasury debt. You can go all the way down the spectrum and not include Russia, but all the way to Turkey, where the probability of default is very meaningful. But you can accumulate all of these essential fiat risks. You can consolidate them. You get a value for Bitcoin as the most beautiful form of insurance against default on a basket of fiats. And one way I like to point out is, Max, you can essentially get the value of buying protection on the USA for about $1 trillion, and you get all the other fiats for free. And guess what? The value of Bitcoin is less than $500 billion, which means you buy Bitcoin today, you get default protection on the USA and all other fiat currencies for free. Wow, what a deal. Ship it in. People don't understand what a beautiful asset this is, and there is no counterparty risk. You are not buying this from long-term capital management. You're not buying it from a Lehman Brothers or a Bear Stearns, two insurance sellers who almost went bankrupt themselves. One of them did. Point is, Bitcoin has no counterparty risk, and you can get protection on fiat currencies all across the world.
Okay, so Greg, the synthetic credit default swap, or the synthetic CDS, as you've just described it, it's the current price of Bitcoin is roughly 95% discount to the imputed or implied value of the synthetic CDS, as Greg has outlined it. Now that's a huge discount. So why I don't, what you're putting forward there is such to me, if I was working a desk on Wall Street, I would be able to sell that all day long. I don't understand. I mean, in 1980s, I was selling quote unquote portfolio insurance and sold a lot of it. Of course, that led to the 1987 crash, but that's another story. But in other words, the story is you've got $1 million or $10 million stock portfolio. We can wrap that for 2% a year with derivatives, and you've got a maximum 2% downside on your portfolio, and you've got all your upside. So this product is, I don't understand why nobody's not like
intellectually lazy, Max. The guys that are programming the algos in the big trading shops, they're correlating it to NASDAQ because they're looking through a rear view mirror and assuming that Bitcoin is actually a risk asset. No, Bitcoin is insurance. You just need to describe it to the proper analytical minds, and it hasn't made it that high up the ladder yet. And by the way, if you are a Jamie Dimon and you perhaps do understand this, God forbid you go out there and tell people, because it disintermediates and cannibalizes your businesses so quickly that you don't want to tell the truth. So I think that, I've made some progress in convincing people that Bitcoin is insurance. It's a long volatility product. It is equivalent to owning default protection on a basket of sovereigns. If I was working at a hedge fund and pitching this a lot harder, like I did in my younger days, maybe I'd have more success. But right now, I'm just happy to spread it amongst the plebs, and it's sinking in. I guarantee you Ray Dalio gets this. Ray Dalio, though, needs to move billions and billions of dollars into Bitcoin, and he can't do it without moving the market. So, this is an incredibly cool concept. There are restrictions because Bitcoin is only still around a $600 billion asset, and Ray Dalio needs to buy about 600 billion of it. Okay. Do you think that wouldn't impact the price of Bitcoin? It's a bit of it's going to be sucking and blowing at the same time. Just understand, though, that this will permeate the common thinking on Wall Street with the help of guys like Fidelity, who is actually doing some pretty good work on Bitcoin, in my opinion.
So the $400,000 implied price, is that, is there a volatility discount that you've applied to that? And
no, it's in today's dollars because CDS is volatility. So CDS is directly related to vol, right? You look at the VIX, you look at credit default swap spreads.
So it's got a volatility premium?
Correct.
I mean, how do you price in the volatility? Is that as a premium?
That is like an insurance premium, exactly.
Okay. And then, so there's no maturity date on Bitcoin.
They're beautiful. No theta, no theta. So no time, no counterparty risk. And Max, I'm going to blow your mind here. Bitcoin is a put on the Fed put.
Yeah, no, I totally agree with that.
What does that mean? It's got gamma. You look your whole life for gamma. Okay. Gamma is this magical thing that you spend your whole life looking for. And it exists in Bitcoin, and these knuckleheads on Wall Street haven't figured it out yet.
Right. Well, probably in part because the hedge fund people that are in crypto, like, not to pick on Novogratz too much, but nevertheless, he is the highest profile ex-hedge fund guy in the crypto space. He lives for gamma, right? He never puts this pitch forward because it's so easy to make money shilling shitcoins, you see? Yeah. If there was some law that applied, some serious enforcement of the current law. They don't need any new laws. All that Gary Gensler has to do is enforce the current laws. And, you know, Novogratz would be forced to actually start working for a living and not just shilling crap. And he'd have to look at this trade as Greg has outlined it, and, you know, put the power of his fund and his colleagues focused on this. That's another benefit. I think that's another reason why Gary Gensler is completely a captured and unreliable regulator, because he realizes that if he took away the punch bowl of having these guys print money in the shitty way that's completely illegal, they might focus on Bitcoin more, and that would, you know, hurt his paymasters down there on Wall Street. It's such an obvious trade, Greg. I mean, it's not. The credit default swap is, you know, one of the things that make the world go round. I mean, that's one of the big bedrocks.
It's the only unmanipulated market there is left in the world, Max, in my opinion.
Okay. I mean, every trading desk in the world sits on top of CDS products to manage the stack. And so here's a put on a put, which is the same thing as a call, you know?
Yeah.
It is, except the beautiful thing is, right, that it is the second derivative. The price, the gamma squeeze is what you live for, right? When people have sold too much, or when they're, I don't want to get too Greek on you, but any listeners know gamma is the rate of change of delta. Delta is your hedge position by selling an implied call or an implied put and hedging it with the underlying asset, okay? But this is nothing but a mathematical model, and that assumes that it goes along at a straight line. What if it goes parabolic? What if acceleration hits the change of the price? Wow, this is when you get gamma squeezes. This is what Wall Street plays for. They try and induce gamma squeezes. Well, guess what? If you own Bitcoin, you own gamma. Good Lord, this is the most perfect option ever created by man. And the rocket scientists on Wall Street are still pounding their pud in the corner, trying to figure out little equity derivative shit, okay? Start focusing on this most beautiful asset in the world and what it implies in terms of insurance on the fiat Ponzi.
Well, this is, you know, Michael Burry from the Big Short fame. He's a hedge fund guy. He doesn't understand Bitcoin, obviously, because he's constantly trashing Bitcoin. If he understood it in these terms, he would be all over it, I would imagine, because
over time he'll get it. He is, you know, he had one great trade in his life, and the rest of the time he's chasing the ambulances, okay? I had the same trade on as Michael Burry at the hedge fund, and then we reversed it and actually made money, far more money on the upside than you do on the downside, meaning betting against it. He was wrong for so long, okay? He was not a good risk manager. He just eventually got it right. Don't ever confuse a guy who gets the trade right versus being a good risk manager. Michael Burry is not a good risk manager, okay? Very simply. Is he full of his own, you know, drinking his own Gatorade or whatever? Maybe. Someday he will figure it out for what Bitcoin is as insurance on the fiat Ponzi that he made a lot of money on by being short, but he was short way too early, okay? He did not manage that like a champ, not even close.
Speaking of trading opportunities, what about GBTC, the Greyscale product, which is at like a 25% discount to the net asset value? And isn't this a slam dunk trade, or what am I missing?
I own some. As a Canadian, I own some. I can't own it in my RRSPs, which is the equivalent of your IRAs. It's not an eligible investment, but I do own some because I love buying $1 for 70 cents. Okay, that's basically the way I look at what GBTC
right. So
is.
This falls under regulatory arbitrage. So you've got a lot of money in this thing, and you've got a lot of very high-priced lawyers lobbying Washington to turn this into an ETF, which I think is the arbitrage here, is that they will succeed or they will fail. But I think given the amount of money being thrown at the lobbying to convert this to an ETF, the chances of them succeeding is pretty high. So you've got a great opportunity there. I don't,
I love it
pitched
as well.
it to MicroStrategy, one of their board members, and I said,
Yeah.
"No, here's a way to lower your cost basis.
Yeah.
All you need to do is play this regulatory arbitrage, put $1 billion into GBTC, send some lawyers to DC, and join the lobbying group." I didn't hear back from them.
I have it better for you, Max. I love your style. How about we sell it to the Canadian pension plan that needs to buy pretty well $30 billion worth of Bitcoin to get 1%, okay? The CPPIB, Canada Pension Plan Investment Board, needs to buy $30 billion worth of Bitcoin. So here's the strategy. They go out, they accumulate 10% of GBTC without telling anybody. Then they go and issue bid on the whole thing so they can take over the fund and unwind it. Take out the Bitcoin, put it into self-custody. Bing, bang, boom. You just arb the market for a couple of $1 billion. Hey, as a Canadian pensioner, I'd be happy that the CPPIB had that sort of brains. I think they actually have the brains. They don't just have the balls. So at the end of the day, there could be a huge fund that takes a run at it that way. MicroStrategy, pure and simple, is not big enough to do it. But there are big ass funds out there that are big enough to do it.
Right. Well, the Canadian pension fund, the governance of the fund might preclude something like that. But like a sovereign wealth fund of Qatar or Norway, they're very entrepreneurial. They could do
100%, 100%. This is big money. And when I was on stage in Bitcoin Miami 2022 with the 4 billionaires, okay, let me tell you that what I took away from that talk is a guy like Orlando Bravo, who's talking to all these monstrous sovereign wealth funds, all of them need to get into Bitcoin. The smart one is going to take a run at GBTC and going to unwind it. Very simple. There might be some regulatory hurdles, yes and no. Don't keep walking by $1 on the ground that's trading for 70 cents, okay? You're not supposed to. This is just un-American of you people not to pick up $1 that's trading for 70 cents. Will it collapse over time in terms of the discount to NAV? I remind you, at one point it traded at a 200% premium to net asset value at one point. So over to you guys.
Real quick on this point, because I think there's probably some listeners who are wondering what happens when Greyscale converts to an ETF. So what happens with Greyscale shares and then converting it into Bitcoin in the ETF?
I would argue that there'll be people that own it for this arbitrage trade, and it won't collapse to a zero discount overnight. But the creation redemption function of an ETF will ensure that the balance gets whittled down from 30% to maybe 7% after a week of trading, down to very close to zero. And the creation redemption function of an ETF, which is a thing of beauty, and Wall Street is very good at this, there will be all sorts of arbitrageurs that line up with physical Bitcoin on the one hand or Bitcoin shorts on the other hand in order to take out the necessary selling if there is. But that's what an ETF does well versus a closed-end fund that is relying on a market mechanism to maintain its net asset value. That's why ETFs exist.
Yep.
Yeah, so the gap closes. Talking about discounts to current price, what about MicroStrategy's stock? I mean, the Bitcoin on the books is worth more than the current price of the stock by, I believe, a significant factor. And they still have an ongoing enterprise software business, which you're getting for less than nothing.
Well, here's the funny thing. They got this, Wall Street has this idea in their mind that there's actually going to be a margin call at $21,000 per Bitcoin. Michael Saylor has gone out and defended that brilliantly. He might be the smartest financier on Wall Street, and he's not even a Wall Street financier, okay? He has arbed Wall Street 6 ways till Sunday with his convertible arb and the premium he actually essentially issued shares at over his all-time high. all the guys that got screwed were the convertible ARB funds that were trying to get exposure to Bitcoin through the back door, okay? Because they couldn't hold it due to their own...
Michael Saylor screws Wall Street, whereas Mike Novogratz screws the little guy.
Okay,
that's the difference between
Saylor,
those two guys.
But he is still a hostage. Saylor is still a hostage because at the end of the day, a $5 billion market cap is just not that big on Wall Street, which is the size of MicroStrategy. Max, here's what people forget though. The short interest needs to be added back into MicroStrategy's enterprise value, the short interest in the stock, because all the guys that are short the stock are long the convertible bond. So if you don't add back the short interest, you're actually double counting the debt short. So you say that it's trading at less than market value of Bitcoin. It's actually probably trading at doubly less if you properly added back the equity shorts on the stock due to the convertible ARB desk. So this is just, it's unfortunate that Michael Saylor is only a $5 billion man. I wish that he was a $30 billion man or a $100 billion man so he could do this, and then everybody else in the world would have to do it because MicroStrategy would be the most valuable company in the world. And maybe it's going to be Elon Musk, another rocket scientist, but I'm not holding my breath.
Yeah, well, the margin call for MicroStrategy doesn't come into play until Bitcoin would get into the 2000s.
3,000, correct. Isn't it funny? But there is, so I subscribe to a very good hedge fund publication, over 600 hedge fund contributors. And I promise you that 21,000 price tag is tattooed into everybody's brain. And they're all shorting MicroStrategy, and they're probably shorting Bitcoin to try and get it to that supposed margin call. That's the way Wall Street works. They're getting throttled on one hand, so they need to invoke pain on other people. You know the way whack-a-mole works on Wall Street, Max. Nobody is going to have a fun time if the big hedge funds are losing money. Oh, and by the way, Tiger is down 50% year to date. 50%. Brilliant hedge fund. Okay. 50%, no fun.
Yeah, well, I mean, it could be just a brilliant way to dollar cost average, because anytime they even get near it, they're just going to supplement the reserve with more Bitcoin.
I 100% agree. Why is the price of Bitcoin? Why is the price of Bitcoin hanging in so well? Because everyone has a $21,000 buy target. And they feel like, shit, it's not getting down there. So I'm not going to be too smart by a half. I'm going to chip away at my position anywhere in the $20,000 handle. If Bitcoin's worth $2 million, which I think it is in today's dollars, not because of my CDS model, but actually because of a total addressable market calculation, if you're messing around because you're waiting for Bitcoin to go to 21,000 versus buying it at 29,000, you're the stupidest asset manager on the block, okay? It's a rounding error in the context of where it could go, especially, and here's the secret sauce, when the gamma squeeze kicks in. It'll go to your $200,000 price target overnight, Max, when one large company or big pension fund announces, you know, $100 billion position in Bitcoin. It's bound to happen. It's going there. That's the way it's trading right now. It's like a coiled spring, in my opinion. That being said, if the world shits the bed overnight, you'll have downward pressure because of the algos that are trying to trade it alongside the NASDAQ.
Yeah, agreed on that. It's falsely being correlated with NASDAQ.
The algos.
Hey, these are powerful things, Brady. These algos.
Yeah.
And by the way, the kids that are programming it, though, they just got out of school and they've never looked into the details. They never looked into the details of an asset. They just look at the correlation and goes, okay, the beta on Bitcoin is 1.5 times the NASDAQ. So if the NASDAQ goes down 3%, Bitcoin, I have to push it down 4.5%. And then when that breaks and all the shorts are rushing for cover, that is called a gamma squeeze. I just know one thing. Gamma squeezes rip your face off. Okay? You could be in for a face-ripping rally when you are caught short and the gamma squeeze comes in. Just my experience.
You sounded like Bitcoin Tina right now, Foss.
I love Bitcoin Tina, but here's the crazy thing about Tina. He and I don't agree on everything because he's trying to hedge his Bitcoin position. And I'm like, Tina, Bitcoin is the hedge. And, you know, but he and I, we love each other like two fat old white men. Okay, so that's what we are. Two fat old white men that love each other.
I can't get that image out of my mind now. Thanks for ruining my day.
Great time to drop or to stop this portion of the show. Anyway, we'll skip over to Spaces. If you're listening on Twitter Spaces right now, you know, if you want to ask a question, go ahead and request to come up. Be thinking about what your question might be.
I was told we would be talking about the Stanley Cup playoff series. I was totally misled by this whole conversation. I have no idea what it would be about Bitcoin.
Go Edmonton. Go.
That's
Edmonton.
what the Q&A is for.
Okay, I'll see you guys on. Well, are we jumping
see you over there?
Now? Okay.
All right.
Thanks, guys.
Edmonton, they suck.
Edmonton sucks. I don't know nothing about hockey. These guys do. Apparently, Max thinks Edmonton sucks. So I don't know. I'll trust his opinion on that one. All right. So we are moving over to Twitter Spaces. We'll see you over there in just a minute. I'm just going to run this preview for Hard Money one more time. Again, that's coming in early June with Natalie Brunell, a weekly show, super high production value, production quality. And we're hoping that it kind of breaks out of the Bitcoiner world and into more of the mainstream world to educate more people about Bitcoin.
Hello and welcome to Hard Money. I'm Natalie Brunell. Bitcoin remains in the high Hope House here in El Zante. It is a community center that does outreach at Bitcoin Beach. Look, they even got their own Bitcoin mobile.
I want to start a Bitcoin caucus with other elected officials across the political spectrum.
It turns everything brighter. Magic money, baby.
Goldman Sachs has offered its first Bitcoin-backed loan for cash.
Everybody knows the word Bitcoin.
The Bitcoin. Oh, Bitcoin. Bitcoin.
Bitcoin.
Sí. Economic freedom with Bitcoin.
On Hard Money, we'll bring you the top headlines of the week with analysis you won't find anywhere else. I'm Natalie Brunell. Welcome to Hard Money.